In today's video, traders, we're going to be talking about oil and some ways that you can successfully trade it. Stay tuned. Let's get into it right now. Welcome back, traders, to another one of my videos. My name is Trader Nick. If this is your first time here, I make all sorts of trading educational content here on YouTube for free to help traders looking to improve. If you're new around here, I do want to invite you to subscribe to my channel down below and also give this video a thumbs up. It really does help me out quite a bit. So let's talk about oil today. Oil is an interesting concept and one that I'm really excited to kind of give a full-on video about. People have been asking me, hey Nick, what are some ways to trade oil? How can I improve my success rate? A lot of times people struggle with trading oil because it can be a very, very dangerous kind of tool or instrument to trade because it can cause some serious moves and it can be a very, very violent mover, has a lot of volatility, and definitely something that I think we need to make a full video about. So let's go ahead and talk about it. What I've got here is I've got Brent crude pulled up on the chart. I'm on a daily time frame, and what you'll notice about oil is very interesting. What you'll notice about oil, if I back it up, you can see we get some really, really big trends on oil. Now, why is that significant? Well, sometimes when you're looking at different charts, you're going to get a different type of reaction. For example, something like dollar Swiss, which is a currency pair in case you don't trade Forex, it trades a lot of times, from my experience and what I've seen, it trades sideways quite a bit, meaning it chops around, it can be very indecisive, and overall the market doesn't move a whole lot in terms of volatility. And that is typical in certain markets. In other markets, however, you're going to get markets that trend more strongly than others. Something like gold and oil tend to actually trend quite a bit, at least from what I've seen in years past. Now, what's interesting about this concept is that there are particular trading strategies that are going to work better in certain markets as opposed to other ones. For example, if you're trying to trend follow or follow the momentum of a market in something like, going back to our example of USD CHF, dollar Swiss, in a market that's going like this, it's going to be really hard to try and trend trade, meaning that if you're trying to go, let's say you try and go long along the tops here, constantly this market is going to kind of break back down, it's going to reverse, it's going to chop around, and so we don't really want to be involved with that. Now, however, remember that I just mentioned that on things like gold and on oil, we have markets that kind of trend and can really continue with a momentum push, and there's a multitude of reasons for that. We'll get onto those in a second. But in a market environment like this, there are certain ways that you can trade this with a bit more of an edge and kind of ride those momentum pushes instead of trying to fight everything, which is a lot of times what people tend to do. People on gold and oil, which they both kind of behave similarly. By the way, I have a gold video. I'll put it up on the screen here if you want to check that out, how to trade gold. Very similar concept, but some minor tweaks that I'm going to be talking about here as we get forward in this video. With that said, markets that tend to continue or tend to trend very strongly, they want to be traded a little bit differently. Right? You might want to trade it a little bit differently than how you're going to trade something that quite often reverses. So with that said, let's talk about some ways that we can actually trade markets like Brent crude oil or gold, right? We want to look for different strategies for different market environments. I think it's very, very important. And a lot of times what traders are going to do is they're going to look to fade every single move on something like oil, where it can be very, very dangerous to try and do so. So with that said, let's get into some strategies, some simple ways that you could potentially trade oil profitably. So again, we are here on Brent crude oil, taking a look at the daily time frame. Now, it's not necessarily super specific to any time frame what I'm going to be talking about, but I'm going to look at the daily because I think it's a really, really cool chart, and we also get some really clean signals here, and I like using the daily chart. So we're going to be taking a look at the daily here on Brent crude. Now, if I insert a simple let's see, where is it? A simple moving average, okay? Now, I know people, sometimes they get sketched out about moving averages. They think they're terrible, or they love them, or they hate them. There's all sorts of different opinions on the internet about all sorts of different technical indicators. But going back to what we just talked about, we talked about different market environments should be traded a little bit differently. And what do we just get done talking about with oil? Well, it oftentimes tends to trend very, very strongly. Again, we're going to talk about why that is shortly in this video, so stay tuned for that. So again, oil trends quite heavily. What you can see here is that as price comes back down to this moving average, you can see that price is responding to it, but overall is traveling pretty nicely with that moving average. You can see, for example, right, when price was underneath this moving average, right here, you can see when price was underneath that moving average, price came up to it, found rejection there, rolled over, and kind of went downtrend. You know, it had a nice downtrend for quite some time there. Finally, when price did break above this 100 period moving average, what you can see is we saw a really solid, steady movement to the upside on oil as buyers continued to chase the price or push the price higher. That's typical trend following 101. Now, trend following is a great concept, but you need to be making sure that you're trading in the right kind of market environment or condition. And oil is one of those candidates that can be excellent for that. So a lot of times oil, again, is going to continue. It's going to continue to push higher and higher. Now, why is that? Now, that's a question that I get oftentimes with gold and with oil. Nick, why do those markets tend to continue, and why don't they, kind of reverse like a lot of the other markets? Well, the reason is because these things are commodities, and these things can be very, very emotionally driven. For example, I'm going to go into just a short little drawing session here. Let's say that the market gets fearful. Let's say that things are going great, and let's just assume that this is like the S&P 500. Let's say that this is the S&P 500. That's the overall market, kind of index for the U.S. stock market. The S&P 500, in case you don't know what it is the top 500 stocks all put into one. Okay, so let's say everything is good. Well, people don't, they want to be involved in this. But someday something might happen where things go crazy and things, get very, very sketchy or scary in the equities market, and people get fearful. Well, when people get fearful, it doesn't necessarily mean that commodities have to go skyrocketing, but a lot of times what we do see is in market environments where things are fearful or scary, volatility increases quite a bit. And with that volatility, a lot of times you get some really nice trends, especially in oil and with gold. So a lot of times we do see those very extended movements here in the charts, and this is where the opportunity lies if you're coming with it with the right mindset, right? A lot of times, again, people are going to try and sell every single step here, not realizing that gold and oil tend to trend very, very strongly, especially in times of high volatility and when things are uncertain in markets. A lot of times commodities become a safe haven for investors, and so you get those extended trends, right? So you start to see oil moving up and pulling back and moving up and pulling back, right? So you see that happening in markets a lot of times due to higher volatility and fear that's coming into the market and pushing investors into oil. So now we have a little back picture of what's going on and why these things tend to happen in the oil and gold markets. Let's actually get into some ways that we can trade this. How can we take advantage of this sort of market environment? Okay, so now that we've talked about it, now that we understand everything about kind of just the general concept of, okay, why does this market trend so hard? How can we actually take advantage of it? Let's talk about some simple concepts that we can use. Now, again, with any trend following concepts, there's a whole array of trading strategies built around trend following. So I'm not going to be able to sit here and tell you every single way that you should trade oil in a simple way, but I am going to give you just a couple pointers of ways that I personally like to trade it. Number one is breakouts. I actually do like to have aggressive breakout strategies built in if I'm looking to trade oil when things get kind of trend following, right? When things get really moving, there are ways that I like to trade it. And for example, I'm going to go ahead and show you this example here on oil. Now, again, what we can see is that we've identified a significant high here. Right? In fact, let me just pull up my sketch pad here momentarily. What you can see is that we have price being rejected very strongly here, right? Price came up into this area, trend pushing to the upside, right? Buyers very strong in this region, but then sellers came in and pushed price back down, right? To every market, there is supply and demand. And so at this point, we did see supply come into this market. Right? And so supply pushed price back down to these lows. You can see we did find support right around that 100-day moving average, and prices started to chatter back up. But again, we did find short-term resistance or supply in this area as well. Hopefully you can read my handwriting that says supply for anybody who can't read that. So price did come up into this area. We found rejection again as price sold off. But this time what you can see is that we're forming a nice series of higher lows. So the overall trend is up. We do have that moving average, right? We also have these higher lows being printed on the chart. We're seeing buyers step in and show that demand here very, very strongly to the upside. Now, what's next? we're looking for some sort of momentum to break out through this significant level of resistance. Remember, I'm not looking to fight the trend here on oil, meaning I'm not looking to try and short this market very much. In fact, I'm only looking for long positions typically in my personal trading when the market is moving above that 100-day moving average, because again, that push to the upside being caused by trend followers and momentum is very, very strong, especially in markets like gold and oil. So with that said, what can we do next? Well, this is where I'm going to potentially look to get involved. Let me show you. I know that this is kind of a cookie cutter perfect example, and not all examples are going to be perfect like this, but I am showing you for a purpose. And that is to give you kind of an idea of what I would be potentially looking to trade the market with. And so again, we've got this level here. We've got this level here. Significant level of resistance. I'm looking to see buyers step in and be strong enough, show me that there's enough strength on the buy side to get this market to close above that significant level of resistance. Now, we did see this candle here close above that level of resistance. Now you could say, well, this, if you were identifying your level of resistance by this wick, and forgive my my handwriting here, but you could say that that was kind of our high point. So fair enough. Maybe you waited for this next candle, which closed here. Again, going to come down to your personal strategy and how you like to analyze the charts. Everybody analyzes the charts a little bit differently, so up to your own discretion there. So looking here again at Brent crude, we see a break above that level of resistance, and price closes above that zone of resistance. That is significant, guys, because we're looking at a market that overall is pushing strongly to the upside. And when you get a significant break and close above a heavy level of resistance like this in a market like Brent crude oil, all the stars are potentially aligning for a very solid move to the upside, because that level of supply now has shown us that buyers have taken over that level, and in fact, there may be some demand in that same area. And that's exactly what we saw here. We played out very, very nicely to the upside. Now, Nick, where are you going to put a stop loss? Where are you going to put a take profit on these sorts of trades? Well, I will say that on these sorts of trades, I do like to use a stop loss. If I'm going to trade a breakout, I'm looking to either get into the trade and let it run, or I'm looking to get out of the trade and scrap the trade pretty quickly short after. So with my stop loss, if I'm going to enter on this here area, I'm looking for a relatively good risk to reward. And let me tell you guys, this is something interesting right here. Let's say that I put my stop loss under here. Okay, fine. We've got our trade managed. We've got our risk managed here on the trade. But let's talk about the more important part, and the part I'm really excited to talk to you guys about. Where do we put our take profit? Well, you have some options here, but I'm going to tell you one way that I personally like to trade oil, and that is no take profit, but to let it run and to try and trail your stops. And here's why, okay? Oil is one of those markets, going back to our concept from earlier, that tends to trend very, very strongly. And if you catch the right trend here, guys, this can be a huge mover and can really, really grow an account if you ride that trend and you have the patience to do so. So instead of putting our stop loss like here, I'm gonna look to put no stop loss, but instead, if price goes in my direction, I'm gonna look to trail my stop. Now you have the option, you could go for 50 pips behind the trade, or you could do some percentage behind the trade, depending on if you're trading on equities or the Forex market. However you trade, right? You have a little bit of an option there on your trailing stop, but my personal opinion, again, I'm not telling you how to trade, but this is how I like to look at it, is to trail your stop on oil and to let this baby run if it's gonna let it run. So in that case, as price moved up, you could have potentially moved your stop. And when you did get stopped out finally, you would have closed for, in this case, probably much bigger than your take profit would have been like. That's just my personal opinion on trade idea number one. Now there are some other ways that you could trade oil. And one of my favorite ways is, again, using that moving average and using trend lines to trade pullbacks in a market. Now, I have an entire video kind of on pullbacks that I would like to share now on the video. You can actually click into that. If you want to look for trend line kind of retracements and all that sort of stuff, you can look at this video. So I'm not going to spend a ton of time, but I will say that generally in an oil market, you also have the concept of, in a strongly trending market, you have a market that's moving like this. Right? You have markets that are moving and pulling back and moving and pulling back. So you could look for some opportunities to get involved on a pullback. in this scenario, you could look for trend lines, right? So as a trend line pullback, you could get in along the trend line, and I do apologize for my handwriting. It probably should look more like this. But again, looking for pullbacks along that trend line could be an excellent way to find some sort of levels. So again, guys, I talked about two main ways. We talked about the breakout on oil, and we also talked about the pullback on oil using either trend lines or just pullbacks to a moving average, right? There's a couple different options there on how you can actually trade the strong momentum pushes that we do see happening in oil. These are opportunities that you can definitely take advantage of if you know what you're looking for. I personally don't like to fight the trend, and remember, I'm looking to either trade with the breakout or with some sort of significant pullback. You could even tie in Fibonacci. There's all sorts of ways that you can trade pullbacks. Again, check out that video. I'll also link it down below in the description if you'd like to check out some of the videos that I have on momentum, kind of trend following pullback strategies that you can dive into. Guys, thanks so much for taking the time to watch this video. I've got more videos here on my channel that I'd love for you to check out. Again, if you like this video, make sure you give this video a thumbs up and also subscribe to the channel. And guys, we'll see you next time.